Good day, viewers. My name is Yuton, taking you through our market views this week. Today, I'm joined with Rufaro as usual. We're going just to discuss about what happened on the Zimbabwe Stock Exchange in the past week. I think, notably, it's quite interesting to know that the past week the market was all red. We saw most counters going down. Interesting to note, only four counters were up last week, with the rest in the negative. However, with that, the ZSE share was down 20%. This was mainly because of the blue chip counters, highlighted by the ZSE top 10, which was down 22%, followed by the top 15, 21. However, in the past months, usually on the exchange, we notice that when the top 10 is up, usually the small cap is down or the inversely related. But last week, we saw the small cap down about 3%. So, Rufaro, can you just give us a highlight of what may be the reasons why we're seeing the market going down? Are people, is it panic selling? Is it any policies or reactions to anything that has happened in the economy or say in the country as yet?
Thank you, Yuton. So I think it's a consortium of factors, really. We can't say it's one factor that has led to this bearish sentiment on the market. 22% decrease over the week in the top 10. So one of them could be panic selling, like you were saying. We had last week the government of Zimbabwe coming up with a number of measures. And usually investors react differently to such information that comes to the market, and some of them will be like, no, probably this time for me to exit the market. So we have been seeing some selling pressure. The other thing could be the banning or suspension rather of lending. So how this works, when you are facing this suspension from borrowing, it means you have to look for somewhere else that you can get money. So if you're a company with stocks, your own stocks, treasury stocks, probably this good time for you to sell those stocks so that you can get the working capital that you need. So it's a combination of factors that we have been seeing. And last week, really, there wasn't clarity in terms of the tax. They'd announced the 40% CGT, and the position wasn't really clear on the withholdings tax, which is the tax that is taxed when you actually sell. So maybe some of the investors were like, before the clarity is there, let's exit our positions. So all those factors could have led to the selling pressure that we were seeing on the market last week.
All right. I think, as highlighted before, we had four counters in the positive last week, which was NTS, Unifreight, FBC, and Getbacks. Notably, two of these are banks. Or do you think it is anything to do with the counters, or maybe it's just a few individuals trading, as speculative investors, who are just pushing up the price? And I think it's also quite interesting to note that of those, you see, Getbacks was only up 1.07%. This is for the whole week. Usually, these are percentage changes we see maybe in a day at least. So, what do you think might be the reason why these four counters specifically were up in the past week?
Okay, so I think it overall speaks to the bearish sentiment on the exchange. But it's very critical that you not only look at the price, but try to look at the volume to see if whatever is being exhibited, is it felt across the market? So if you look at NTS, there were only about 400 shares exchanging hands over the week, resulting in the 7% increase that you mentioned. So it could be one retail investor who just bought and sold. So it can't then represent the overall sentiment in the market. But perhaps worth noting is FBC, that had trades of over 80 million. And before this, I think a few weeks ago, FBC had announced its full year results. And I remember going through the results, the book value, the net asset value, that was higher than their current market price when the results were released. So usually, a balance sheet is something that's very significant for a company like a bank. So a net asset value is something that you can compare with market price to actually see if the company is undervalued or overvalued. So it could be some of the factors that led to people trying to move towards the true value of FBC. But other than that, yeah, the sentiment in the market is just bearish.
Um, I think you highlighted the point about the volumes traded. On the loser side, top losers for the week, we are seeing quite significant volumes that side. We have counters such as Mashonaland Holdings, which was down. Just this is our top loser for the week, going down about 34.5%, and this was all done with trades with about 152 million. Our biggest counter, Econet, was down as well, trading about 306 million for the whole week, losing 27.9, about 28%. This on the negative side, we're seeing significant losses, and these are supported by significant volumes as well. I think we have highlighted on why the market is going down. I think on this, do you think these counters are going to keep going down? Is the market still going to go down, or maybe we're reaching a point of support, I would say, of resistance to maybe go up as well, maybe to trade in a better way?
Okay, so let me just throw in a bit of some figures to probably give perspective. So at the height of the bull run, Econet reached a market cap of 750 billion, and now it is retraced to something like 550 billion. 550 billion, take a rate of what, 400, it's still over a billion. So I feel like there's still room for retracement back. And also last week there was now clarity on the issue of the CGT and the withholdings. So the withholdings tax is increased by 100% from the 2% to the 4%, which is something which I feel like investors won't like. So if you are having those short-term investors who are doing speculative buying, probably it's time for them to exit the market for good. So I feel like it's not yet over for the bear run. We are still going to witness it for some time, as long as the lending is suspended and these measures being put in place. I feel like we still have some way to go. The market isn't really corrected that much. We are still at what, 7.9 billion US dollars in terms of market cap. So we still have a long way to go.
All right. I think speaking of volumes, our top counter traded by volume last week was Delta, which was actually it's quite significant, trading about 598 billion during the course of the week. We're seeing company on our list of counters traded by volume. Usually have Simbisa was there for some time, Econet, and they're still there, but they're no longer leading. We have Nat Foods last week. It was the second most trade with the highest volumes traded in that counter. I think just going through the list and counters there, these are usually the top 10 by market cap as well, with however 1 or 2 outliers per week. So what do you think is something we can take from this regarding that? About most of them, I'd say all of them, were down during the week, and they traded quite significant volumes. We have Masimba there, EcoCash, Tanganda. Or what is your take on that?
Okay, so I've been tracking these volumes for quite some time now, and you usually see that in a week, companies like Econet, they can go to around 800 million or even a billion. So what we're actually seeing is that there are investors who are still holding into companies like Econet, because you and I know that Econet is the probably most liquid counter on the market. It pushes the highest volume, controls about 18 to 20% of the market. But despite the decrease in share price in Econet, then the volumes haven't been as it used to be. So I feel like the investors who really believe in counters like Econet, who are logged in, who are just waiting for the noise to end, the bear run to end, and they'll take their profit going. So in as much as we're in a bear run, the volumes are lower than the volumes that we were experiencing during the bull run. And I think it also speaks to what the Minister of Finance was saying sometime last week about money getting into the economy. I think sometime last week, was it Wednesday, we witnessed about $1 billion getting into the market on a single day. Yes, they might think that that's too much, but during the bull run, we were having that like almost on a daily basis. So I feel like the amount of money getting into the stock market is retraced. In as much as there is panic selling, there are quite a number of investors who are still logged into the market and believe that this will pass and they'll get their returns.
Right. Talking about government policies, just over the weekend we saw the Minister of Finance saying that those with free funds can now import or pay your basic commodities to ease up price hikes happening all over. I think that will affect our count of the day today, which is OK Zimbabwe. So maybe coming from that perspective, how do you think the allowing of importation of basic commodities will help or affect OK Zimbabwe and maybe the market at large?
Okay, so allow me to take you back to 2016. You remember of SI 64 of 2016, which basically dissuaded the importation of basic goods. The idea was to promote the local industry in Zimbabwe. So this kind of protected the retailers, your TM, by then it was TM and OK and all the other. And subsequent to that, there was this War Buy Zimbabwe thing to try and promote local products. And last year, we saw the CZI announced that the manufacturing sector actually grew by 30%. So now what we are seeing, I feel like it's a step back, because we are going to allow importation using free funds of the basic commodities. I didn't say it's a bad thing, but I think in terms of trying to promote the local industry, it's a step in the wrong direction. It could be a good thing for the economy, because we definitely do not want empty shelves. We don't want to lack basic goods, especially getting into elections. But looking specifically at the retail sector, I think it's a blow to them. I think the competition is going to be very fierce coming from neighboring countries, especially South Africa, Zambia. They produce goods at a way cheaper cost than us, and eventually they sell to us cheaper. So I expect to see their sales volume trembling. Their sales volume have to go up. And the pricing mechanism really, sometimes you get into these retail stores and you're shocked. How come is this? So I feel like we've been opened up to better alternatives. So they'll have to price competitively now, knowing that the competition is now fierce. So I expect it to reduce their sales volume and their revenue in inflation-adjusted terms going forward. But for the average man on the street, I think it's a somewhat good move as we getting into elections.
Right. Thank you, Rufaro, and thank you, everyone, for joining us today in this episode of Market Views. Please like, share, and subscribe. See you next week, and have a good day.
Thank you.